Hello everyone, thanks for checking out my video. I'm back after being away for the last 1 week. During this period, Nasdaq hit a 2023 high, Google went on a parabolic run, Twitter appointed a new CEO, inflation showed further signs of cooling. The only thing that left unchanged was that S&P 500, aka the broader market, continued to trade in a tight range. So where is the market headed from here? Are all the technology stocks ready to rally to the end of the year? Let's dissect some of these things in this video. Alright, last week was a mixed week again. What's new, right? Basically, tech-heavy Nasdaq was performing pretty well, while S&P 500 and Dow Jones were down for the week. But on Friday, as the mega-cap tech stocks showed signs of weakness following their recent rally, all major indices ended Friday in red figures. Some investors are saying the dip on Friday could be due to the US consumer sentiment data that was released by the University of Michigan, as it dropped to a 6-month low. But some positive news from last week were that CPI, aka inflation data, came in lower than expected, as it showed further signs of cooling. The CPI basically rose 4.9% from a year earlier, dropping below the key 5% mark since April 2021, which is about 2 years ago. This is deemed as good news for investors who have been worried that the Federal Reserve may continue to raise interest rates, which may then trigger the widely talked about recession. Another positive note is that based on the data from FactSet published on Friday, 78% of companies that have reported results so far have beaten expectations. This is higher than the 10-year average of 73% and the most since the third quarter of 2021. Well, some may say that this is because the bar has been set so low that almost every other company is able to beat the expectations. I mean, in a way this is true and is debatable, but let's not debate it here. In my view, I just thought that things weren't as bad as the market had feared before we entered this earnings season. In the week or weeks ahead, investors will be paying very close attention to the ongoing debt ceiling negotiations. If you are still not sure about what this is all about, just do a search on YouTube. There are lots of YouTubers talking about this debt ceiling. Anyway, there will be a meeting between Joe Biden and the House Speaker Kevin McCarthy this coming week. What I understand now is that the Republicans and Democrats remain sharply divided, so let's hope the crunch talk between Biden and McCarthy can offer a breakthrough on the debt ceiling. For information, should there be a US debt default, there will be serious repercussions on both the US and global economy, and of course the stock market as well. But just to also share, this is not the first time this whole debt ceiling thing is going on. Again, Google it if you wish to find out more. But yeah, the point here is keep an eye on the outcome of this debt ceiling issue in the upcoming week or weeks. Going back to the stock market, as shared earlier, Nasdaq has overperformed when compared to S&P 500 and Dow Jones, largely because various tech stocks have been on a massive run-up in the last 2 weeks. And specifically for last week, it was Google parent company Alphabet carrying the index by rallying more than 10%. So here's the biggest question, is the tech rally sustainable? Was Friday's session a sign that weakness is seeping into the tech stocks again? Therefore, be mentally prepared for some pullbacks in the coming 1 or 2 weeks. In fact, we actually had it last Friday as Microsoft, Apple, Meta, Nvidia and Tesla all closed the session in the red. Okay, let's now move over to the technical analysis segment. Very interesting chart here for SPY. Okay, let's go straight to the point. In my view, I think there is a high possibility of a huge movement in the upcoming 1 or 2 weeks. Why so? Well, if you have been following my videos, you would know that whenever the Bollinger Band gets squeezed and becomes really narrow, it is usually followed by a huge movement in either direction. Well, this is not 100% because nothing is 100% in the stock market, but the probability is high as you can see that the B-band is compressing and SPY has been consolidating for the last 30 trading days. That being said, please note that this is SPY, it tracks the S&P 500, so don't expect like a 10%, 20% movement up or down. This is not Tesla, not Nvidia or some meme stocks. SPY doesn't move in such huge magnitude. So by looking at this chart, huge movement in SPY's context on the downside is touching the 23.6 Fibonacci level at around 400 level. This is also where the psychological level sits. And if there is strong weak momentum, we can expect the gap below to be filled, which is around 396 to 398. Strong support should come in when it touches the dynamic 200 moving average, which is currently sitting at 394. If SPY closes below this, then bears have gained back control, with the next target at 389. Anyway, I have mentioned in many of my videos that the current market is very resilient, and therefore I think it is very tough for bears to bring it below the 200 moving average for now. Unless say US default on their debt, then yes, SPY could drop quite a fair bit. On the other hand, huge movement on the upside would mean that we may break above the recent high of 417, and with that, we will likely fill the tiny little gap at 419 to 420. Also, as mentioned in my previous videos, if SPY can take out August 2022's high of around 426-427, that's when I think bears should admit defeat, as we are creating a higher high and also officially out of the bear market in a convincing manner. Anyway, some quick words. Sorry if I could only share that I think a huge movement is incoming, but I am not able to predict which direction. Some may think that this is equivalent to not saying anything, but to me, if you know TA, technical analysis, this would actually mean something. And if you know my style, you would know that I don't quite usually predict a single direction. To also share, I have caught for a huge movement in Tesla and one or two other stocks in the past when the B-band gets squeezed. And if you know how to play the volatility game, you should be able to profit as a trader. Okay, let's now talk about Apple. Apple is looking great as it broke above the red dotted downtrend line. The next target for bulls will be August 2022's high at around 175. If we can close about 2 green candles above this level, I think sellers will dry up, meaning to say less sellers will be around. Not only that, FOMO buyers will start stepping in, and that will eventually push it towards March 2022's high at around 178 and maybe even 180. Alright, here are some personal views to share. To me, I think the probability of downside is higher than upside. Why so? First, Apple has been on this monster run, and from technical aspect, it needs to take a break. As you can see in the past, whenever Apple has such parabolic run up, it is usually followed by a huge plunge. But, here's the but, this time is a bit different because the overall trend is bullish. So, a pullback is still possible, but a slightly smaller magnitude, perhaps. Maybe something similar to what we have seen in February this year, where it dropped from 156 to around 144. That's about 7.7% downside. To be very frank with you, I don't know how big will the pullback be, or maybe I could be wrong and Apple just continues to rally to 180. But let's say I am right about a potential pullback, I think we could easily fill that big gap between 166 to 170. After which, the next target for the bears will be the 50 moving average of 162 and the second gap at the bottom, which is between 158 to 159. I also wanted to highlight that there is a bearish divergence on the RSI last week. So come this week, watch the MACD very closely. If it starts to cross down, we do have some room to fall, and this is one confirmation that I will be looking out for. Anyway, if the downside really happens, expect strong support at 155 level to the gap area at around 158. From the current price of 172 to say 158, that's about 8% downside. But I wanna repeat myself again, this is not a guarantee, and I stand corrected. This bear thesis will be invalidated if Apple closes 2 green candles above August 2022's high. All in all, it will definitely be interesting to see how Apple moves in the next 1 or 2 weeks. Let us now move over to Tesla. Tesla has been on a mini uptrend since that big fat green candle on 27 April. But, here's the but again, it looks a little bearish to me right now. Firstly, there is a bearish divergence on the RSI. Secondly, can you see the big fat red candle formed last Friday? That's called a bearish engulfing candle. So it will be interesting to see if Tesla's weakness will continue this week. Give it another few more days. If it continues to trend downwards, we could potentially have a bearish MACD cross by the end of the week or early next week. If that happens, Tesla's trend will be more bearish and we could easily fill that little gap at 162 to 163. Below this, there should be some form of good support at 159. As you can see, Tesla has been bouncing off this level since it gapped down post-earnings. This 159 level is quite important. We almost lost it on 26 and 27 April, and if we lose it this time, Tesla may just head towards the bottom of the gap, which is 146, and that is where the 61.8 Fibonacci level sits. If this breaks, I am of the view that Tesla could experience a waterfall down to the 3 gaps at the bottom, maybe filling 1 or 2 gaps in the process. Alright, it's viewers appreciation time. In the last few videos, I thought I didn't manage to garner any support from the viewers based on the following options: hit 45 likes, sign up for Weibo account using my referral link, and buy me a coffee. So it turned out that the dumb me didn't realize that there were a few of you who used my Weibo referral link to sign up for an account. Therefore, a big thank you to these 4 viewers who have signed up in April and 1 viewer in March. Don't worry, all the mobile phone numbers are masked and I wouldn't know who you are. But yeah, thanks a lot. By the way, there were actually 2 viewers who signed up in May but have not deposited any amount in Weibo account, so do remember to deposit any amount such as $1 and you will get to receive free shares. Meanwhile, I think most of my viewers are from Momo, right? So if you are one of them, you can consider using my link for their latest Mother's Day promo. How it works is that step 1, you click on my link. Step 2, you will be prompted to log in using your existing account. Step 3, you will have to click the Give Now button to generate a link, and then you pass the link to your mom, which should be a new user. Your mom will then get $50 fun cash coupon. By the way, I don't get paid upfront from both Weibo and Momo, just to let you know. It's only when you sign up using my referral link then I get something in return. Finally, if it's within your means, you can also support this channel by buying me a coffee or just tapping on the like button. Thank you. Okay, back to business. On the other hand, if somehow the bearish signals are proven wrong or get invalidated, I think we could easily fill that gap between 174 and 177. Bulls may even push it towards the 50 moving average at around 180. Bearing in mind that Tesla is a very volatile stock, if it wants to fly, the bull's target will actually be 190. That is when I expect some resistance to come in. If it goes parabolic and charge towards the 200 moving average at 205 within a week or so, I will be selling covered call option, which is a bearish move. Personally, in the near term, or at least for this particular week, I think it's unlikely Tesla will close above the 200 moving average. Daring traders may consider selling covered call at slightly above 205. Quick disclaimer, this is not a financial advice. All said, nothing is impossible because it's Tesla. Let's see. Moving over to Google. Wow, Google, simply wow. Check out that parabolic move up, that huge gap up. Amazing. In my very last video, which I will link it at the top, I shared that watch out for 108 to 109 area, as Google seems to have difficulty breaking above it. But once it's broken, the upside potential is quite a fair bit. It could potentially grind up to 120. Check out where we are now. Google went as high as 118, just $2 short of the target. Come this week, 120 will continue to be bull's target, while at the same time it will be a level of resistance as well. Above this, the next resistance is 125. This 125 is once again an important level. Once broken, the upside potential is massive again. We may be looking at filling the gap at 132. But yes, here's the but again. Google needs a break from a technical point of view. It can't just go up in one straight line. Therefore, this week I am expecting some form of weakness, but whether is it a big or small one, I don't know. Anyway, why am I expecting weakness? Reason is because the RSI is super overbought. I had to zoom out the chart and search high and low for the last time Google was so overbought. It was April 2021. That was about 2 years ago. At some point, buyers will dry up a little bit and some sellers will want to take profits. On the downside, the big gap is shouting to be filled. The range is 112 to 114. Expect some support at around 108 and 109 area, where it used to be a resistance zone. Even if we break below this, there's nothing to worry about for bulls because there is another strong support at 100, where the psychological level and 200 moving average are. But honestly, given the recent AI craze and product enhancements by Google, I don't think Google will fall below 100 in the upcoming 1 or 2 weeks. Unless, of course, something serious happens, for example, a US debt default. Therefore, with this, any form of pullback, be it a minor or major one, it's an opportunity to step up shares. Okay, this is not financial advice, alright? Alright, this video is getting a little long, therefore I will do a quick one on option trades. So while I was traveling last week, I actually saw a cash secured put option on Tesla with a strike price of 140 expiring 16 June. Again, not showing the premium yet as my intention isn't for viewers to follow blindly. Anyway, sharing my rationale with you guys, the option was sold on Monday 8th of May because of a few very short-term bullish signs. Firstly, there is a super mini inverse head and shoulder pattern, which is bullish. Secondly, MACD had a bullish cross the trading day before, which is 5th of May, Friday. Thirdly, Tesla bounced off the Fibonacci level of 159 and stayed above it for more than 3 days and created higher lows in the process. As a result, I sold the put option, which is a slight bullish move. But in case you wonder why in my earlier technical analysis segment I talk about bearish signals, am I conflicting myself now? If you ask this question, great, means you are paying attention. Anyway, that's the thing about me, I try to remain as objective as possible, I share what I see. So what I have painted in this option trading segment was for the period of 27 April to about 10 or 11 May. And towards the end of last week, which is 11 and 12 May, the bearish patterns aka RSI bearish divergence and bearish engulfing candle were formed. All this only proves something, trend can change quickly, in weeks, in days or even overnight. And I have shared many times, don't marry yourself to a permanent view. For me, I read what is shown on the chart. When it is bullish, I share them with you. When it is bearish, I cannot choose to ignore them. So likewise, I also share the bearish signals with you. But all being said, I could be totally wrong. Okay, one more trade to share, that is this covered call on Google. Great, it's down 240%. Why great? Because most of the times, my option contracts have expired worthless and I get to keep the premiums without doing anything. Therefore, I thought this particular trade is a good example to pin the volatility and the risk that option trading will bring about. More importantly, it also gives me a chance to share with the viewers on how I can act on such trade if it goes south. Anyway, I have shared my backup plan 2 videos ago. Once again, I will link it at the top, click on it and fast forward to the option trading section to find out more. But meanwhile, for now, I am not doing anything yet as the trade is still 2 weeks away from its expiration date. Though I know there is a risk that 100 shares of my Google may be caught away anytime as it gets deeper in the money and close to expiration date. Anyhow, let's see how it turns out and I will continue to provide update on this trade. Meanwhile, if you like my sharing on my option trades, please comment down below so that I know people are watching this segment. Thank you. Alright, some end thoughts for this video. In my view, investors are still managing and dealing with the broader economic concern. For instance, recession is still on the card, core inflation is still sticky, and we are still some way from achieving Fed's target of 2% inflation. Banking crisis is still not quite settled yet. And of course, the biggest issue right now is the debt ceiling limit. Well, yes, some may say that this is nothing new, US default is unlikely. I kinda agree with that, but before this is settled, I think we can expect some form of volatility in the stock market. After so many weeks of talking about a sideways market, the stock market is still trading sideways. Apart from the tech stocks, almost no other sectors are making convincing moves in either direction. If we want a new bull run in the market, we need more sectors to rally together. With the current choppy and range-bound stock market, it also means one thing to me, and that is investors are still lacking conviction in the broader economy and the stock market. Even for the tech industry, yes, Nvidia and Meta are up almost 100% year to date, and Microsoft, Google and Apple are up 20-30%. But once again, going back to my earlier question, how sustainable is their parabolic run? Okay, just to set things straight, don't get me wrong, I am not saying a huge plunge is incoming, and that all stocks will give up all of their gains for this year. I mean, to be honest, I have to give credit to these mega cap tech stocks. They really do have strong balance sheets and a decent first quarter. And this is the reason why I have been picking up their shares since last year. But, yes, here's the but. There comes a point where valuations do matter. Look at Nvidia, it's so expensive now in terms of valuation. And some other stocks like Apple, Microsoft are on a very steep uptrend. So the message here is, from technical point of view, a significant pullback is needed to have a healthy and sustainable rally. The pullbacks can be 5% plus or minus for a week. So yeah, we do not have to see a 20% or 30% slump, okay? All in all, as a long-term investor, such meaningful pullbacks are opportunities for me, though I will not be too aggressive in purchasing some of these shares. Alright, so how about you? Is anyone buying shares during this period? Let me know in the comment section below. With that, I will see you in the next video, and do remember to help out this channel by tapping the like and subscribe buttons. Thank you.